Good afternoon. I'm here to tell you about Barra Resources today, and I'm going to tell you about our advanced, low-capital cobalt-nickel project called Mount Thirsty, located just near Norseman. I've got some wonderful news to share with you today. On Friday, we had some fantastic metallurgy results, and just this morning, we upgraded our resource to JORC 2012. We've got a dual commodity strategy in play. We've got some gold assets just around Coolgardie, historical gold assets, and I'll tell you more about those, and we've got drilling planned throughout the year. And best of all, we're located in the great mining state of West. We've got fabulous infrastructure, we've got a fabulous workforce, we've got a stable government, and of course, we're a guaranteed ethical supply of cobalt. So let's talk about the cobalt price. When I was here last year, I was lucky enough to have this wonderful chart that just kept going north and didn't seem to have an end. Of course, commodity markets go up and down, and let me give you a little bit more colour on where cobalt's at. So the top graph there sort of doesn't look that rosy. Over the last 4 years, it's come up and down. But look over the last 120 years. That's the real cobalt price in US dollars from the US Geological Survey. And you can see there the trading range has gone up and down, but we're actually now at a point of historical low prices in real terms for cobalt. Now that doesn't quite stack up against the supply and demand dynamics, the electric vehicle story, the battery story that I'm going to tell you about. So in terms of electric vehicles, where are they going to come? Well, it's all been driven by the battery costs. We were up around about $1,000 US per kilowatt hour in 2010. We're now nudging towards $100 per kilowatt hour, that point where price parity occurs. And in many jurisdictions, particularly the US, the UK and Japan, where there's government subsidies in place, it actually makes economic sense. Once you factor in the maintenance costs and the fuel costs, it makes economic sense to buy an electric vehicle. In China, this is recent data for you, just over the last 2 years there, you can see the new electric vehicles that have been approved in China over that period. The range has extended from a couple of years ago, they were averaging 200 kilometres per vehicle approved by the central government. They're now up towards 350. And that's driven by this improved technology, improved energy density, the orange line. And it's all happening up in China. We may not see it so much here. Along Stirling Highway, you can see a few Teslas driving up and down, but it's all happening in China. You look at the global vehicle market, and it's dominated by China and the USA. Everybody else pales into insignificance compared to the size of those markets. China's the largest market, it's the fastest growing market, and it's the one with the most exposure to electric vehicles. They've gone from 0% electric vehicles in 2014. In the recent Q3 2018, 5% of their vehicles were electric, new car sales. The government has set a target there of 12% electric vehicles, and when the Chinese government says they're going to set a target, they achieve those targets. And this is a little bit foreign to us sitting here in Perth. This isn't your traditional automakers we're familiar with. These are brand names that most of us have never heard of, and it's happening, it's real, it's happening today. So cobalt, we know cobalt's in short supply, so there's certainly some thrifting away from cobalt. But let's not forget that cobalt is an essential ingredient in batteries. Its key property is its thermal stability. Without cobalt, your battery is likely to catch fire. So there's certainly development technology. We're moving from a 622 cathode chemistry, which is 2 parts cobalt, to a world of 811 cathode chemistry, which is 1 part cobalt. So while the cobalt in your batteries is halving, you overlay that with the demand dynamics and you've still got an exponential growth in the cobalt required for electric vehicles. The supply side, it's not really that clear where that cobalt is going to come from. Look, I've told this story many times, so I'll just give you the headline number. I'm sure you've heard it before. Cobalt's dominated by the DRC. 70% of all supply comes out of the DRC. And the other dynamic is that 99% of all cobalt is a byproduct of nickel and copper mining. So you need a higher nickel price, a higher copper price before additional tonnes come onto the market via that mechanism. There's also higher barriers to entry. Many other projects have a very high capital bill, and I'll tell you about our project being a point of difference there. So Cobalt Valley, this is the solution. We're located near Norseman. We're 16 k's from Norseman. It's a fantastic location. We've got road, we've got rail, we've got gas, power, water. It's all right there, and there's even a fibre optic cable. I'm pretty confident I can get high-speed internet to Norseman before we can get it to West Perth, so it's all right there for us. We own 50% of the project. It's a joint venture with Conoco, and it's a really collegiate joint venture working very well. So the big news today, we announced on the ASX this morning our upgraded JORC 2012 mineral resource, and the real big story here is it's now 90% indicated classification. So the work we're doing, the pre-feasibility study, you overlay that with the JORC 2012 resource, and we're moving towards an ore reserve at the successful completion of our pre-feasibility study. We've tightened up on how we estimate our density, our moisture. We've re-estimated as well, and we've done all of that without having to go and do additional drilling. Already drilled out on a 50 by 40 tight grid spacing. There's also additional mineralisation, another deposit called Mount Thirsty North that we drilled out in 2017, and we haven't quite built those numbers into our resource estimate just yet, but that's coming. So to get from that resource and that geology into a valuable product, we need to take you through the mineralogy and the metallurgy story. The cobalt is tied up in a mineral called absolene. It's a manganese oxide, and we're lucky enough that our nickel laterite has had a secondary enrichment process come through, where the manganese and the cobalt have been remobilised and crystallised in these veins of absolene that can be readily leached at atmospheric pressure using sulphur dioxide. So drilling into the next level of detail as well, we've got some fabulous QuemScan results there, and what you're seeing there on those charts is the blue mineral there is the absolene. It's got 63% of the cobalt and around about 10% of the nickel. Our scoping study in 2010, which gave some very positive economics, was based on really targeting that material, atmospheric pressure SO2 leach. We can see there's a bigger prize. We can see the goethite there. If we can leach that goethite, we can significantly improve our recovery. So that's what we were really targeting in our metallurgy test work. We thought we'd have to go down the beneficiation path to achieve that. We thought we'd have to upgrade our concentrate prior to leaching. We thought we'd have to add acid to achieve that. But I'm really pleased to tell you today that we've actually achieved those upgrades that we were hoping for, and we've done it without acid, and we've done it without beneficiation. We're using first-class engineers at the Wood Group. We're using ALS laboratories there in Balcatta, and really is top-quality work, and we've got our recoveries now up into the high 80s for cobalt and into the mid to high 30s for nickel. Minimal additional costs. We've tweaked around with our parameters, tweaked around with our reagents, but minimal additional costs. So subject to the pre-feasibility study, that's cash all coming straight down to the bottom line of our project. In terms of our product, we've taken a strategic decision to make a mixed sulphide product. That's an intermediary product. We're not going all the way to batteries. We're not going all the way to cobalt sulphate. We're going to stick to our knitting. We're going to stick to what we're great at in Western Australia, and that's mining and mineral processing. This mixed sulphide product, we've selected it. We can capture at least 80% of the value through this product without having to go down your white lab coat type environment to achieve a sulphate specification. The product is of great strategic interest to many multinationals. It will fit beautifully in a whole bunch of refineries owned by tier 1 companies around the world, and we think that that's a great place to position ourselves. So the study is well underway, as well as the metallurgy. All of the permitting's progressing very well. We had done all our spring biological surveys, no rare flora or fauna that are going to cause any trouble there. We'll work through those processes in an orderly fashion. And I'm really excited to now rip into the mine planning. We've got our JORC mineral resource, 2012 indicated. We've got our metallurgy results. We've got our understanding of our domains within our ore body. And I'm very confident that applying that to the mine plan, we can really front-end load a lot of the higher grade, higher performing tonnes and really significantly increase the value of the project. With the Wood Group, they're through phase 1 and we're just putting the finishing touches on phase 2 of the pre-feasibility study. Together with our joint venture partner, we intend to release the funding very, very shortly to charge into phase 3 of the pre-feasibility study, which is the final nuts and bolts capital estimating and engineering. Our scoping study came out with a capital cost of $211 million, and obviously the Wood guys will work through that and estimate that number for us. But it's a real point of difference compared to your high-pressure acid leaching route, which is typically $1 billion plus. We really feel that we've got a sweet spot in the market with our project. So let's move on to our gold. Let's not forget about the gold. Barra's been listed since the year 2000. Our assets were born out of Barminco, Australia's largest underground mining contractor, and indeed Peter Bartlett is still our major shareholder at 15%. Barra's been in and out of production over the years, and in fact it's served the company pretty well, particularly when times were tough and capital was hard to come by. We were able to run these small mining campaigns. Our strategy, however, is that we're not going to rush into mining that gold. We've got 125,000 ounces of gold in our mineral resource portfolio now, but we've got an objective to get that up to 500,000 ounces. We did 3 small drilling campaigns last year that resulted in resource upgrades, and we've got the same planned again for this year. Coolgardie's an interesting part of the world as well. There's a little bit of activity happening around. It's been a little bit of a sleepy place for quite a few years, but it's really starting to happen now. Northern Star's moved into town. They've picked up the South Cowal operations off Westgold. You've got Intermin and McPherson's, who have recently merged and in fact have put their foot on Focus Minerals assets for a proposed purchase of $40 million. We're right next door to all of that action. What does that mean for us? We're not quite sure, but we know that there's plenty happening and that building ounces is a good thing to be doing at the moment. So the first of our Coolgardie projects is Burbanks, a very high-grade system. 420,000 ounces have been mined out of Burbanks over the last 100 plus years at an average grade of 18 grams per tonne. Very high-grade system. We've got 125,000 ounces in our mineral resource inventory at the moment, and we're intent on building that up towards that exploration target and indeed to the upper end of that to 500,000 ounces ahead of mining. And that'll come from right along that structure there. At this stage, the resources there are just at 2 of those prospects, Birthday Gift and Mainlode, but there's opportunities right up and down that corridor. Phillips Find is our other Coolgardie gold project. That's located just on the north side of Coolgardie, I'm sorry. And look, we've also had historical mining there. And in fact, we've been chasing this target called Truth recently, where we drilled through shallow alluvial cover, a lot of historical prospecting and so forth. And we were very, very pleased that we hit some broad gold anomalism with the structures that actually tie right back to that same Phillips Find mining centre that we exploited years ago with open pit mining. So there's a lot to follow up there. And as we speak, we're just formulating our plans. But between those 2 projects, I expect that we'll have 3 drilling campaigns to keep investors interested throughout the year, with plenty of news flow to complement the big beast in our cobalt project. Thank you so much for your time. We've got the booth out the front, and I'd love to tell you more. Thank you.